The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
This 16th day of January, and new record high, of course. Dow's up 165 at 25,967. S&P is up 7 at 2793. A little discrepancy there, and it's been like that for a couple of days. The Dow much stronger than the S&P. The comp index is up 24 at 7285. The VIX is at 1124. It's up $1.08. A lot of insurance being bought there. Couple of things going on here. The E-mini is up 5 and at 2794. Let's go through a couple of things here one by one for the beginning of the week. We've got the Dow is up 160 at 25,963. It hit earlier in the day. It hit 26,086. New all-time high. That's the quickest we've ever gone through 1,000 points. Oops, what, 5 days or something like that? 6 days, 1,000 points up. And what's really interesting about this is that the MACD, the moving average, here on the left side, you can see the moving average convergence divergence still very strong. It'll take quite a few points. In fact, I wouldn't be surprised if it would have to close decisively under 25,462, the 9-period moving average, to really get the MACD to deflect, to turn down and become that green line, the 9-period differential, to go under the red line, the slow-moving average. The stochastics at 95%, that's very good. The on-balance volume, the blue line, is becoming extremely overbought, but overbought can stay overbought for a while. Leg E, gap up. Leg E on the weekly chart, and the MACD again is very good, and the relative strength, the on-balance volume, the stochastic are very strong. The monthly chart is in leg E. Let's go to the S&P. The SPX.X is trading right now up 6.23 at 2792. This is a very strong leg, gap up leg D, and the high today, all-time high, is 2807.54. And here again, MACD good daily, stochastic very strong, 94%, on-balance volume very strong. Leg D in the weekly chart. This is really interesting. And a leg D in the monthly chart, all-time highs. All the technicals are very good at this particular point. Now, let's go to the QQQs of 1, 2, 3. The QQQ right now had a very strong leg G/C to the upper part of this trend line that I drew for subscribers to my opening call over the weekend. I said there's very strong resistance right here at the 166.50s. The high today is the 166.41 level. And the leg E in the weekly chart, only a leg C in the monthly, and in the Chapman Wave methodology, it's D that we look for, and that's where other things can happen. Let's go to the E-mini, and I wanted to show you something here. The E-mini right now is up 5.25 at 2,749. If you look at the 120-minute chart, what I've shown subscribers and I've shown here in the den early this morning is that there was a spike to a leg F, and that hit a trend line resistance. If there was a pullback and it went under the 9-period moving average, that would probably make a peak F, and that's exactly what we've got right now. So very short, let's call it near term. We're in a position where we should be starting to see some kind of a pullback. Now, what's really interesting is that the daily charts tend to show a little bit more strength is available this week, so perhaps we still need to see a little bit of higher prices, and then we might start to see some kind of a consolidation. We'll go one step at a time. IWM made that all-time high on Friday, extended it today, leg E daily, leg E/C weekly, and let's get out of this because we don't need it right now for the 120-minute chart, leg E monthly. So all the technicals are confirming the highs. That's not to say we can't turn down at any point, but at this particular stage, I do see enough residual strength to say, yes, we could get a pullback maybe for Wednesday, and then maybe Thursday try to tap a new high. But we're getting real close to some kind of consolidation if the overbought levels I'm looking at are going to hold true. And I want you to go to the gold. Gold right now, GC, was down a little bit. Now it's up 0.1. It's making a leg C, possibly a peak C in the daily chart, a gray leg A in the weekly because it's underneath the previous high that was made back in, was that September? Yeah, September, the week of the 8th at 1366.9, pulls back quite sharply. Monthly chart is starting to improve with this very strong move from the 1240 level to the 1236, 1240 area. So that's helping the monthly chart as if it wants to go to a leg D, and that'll be over 1366.9. But wait a minute, let's just do silver, and then we'll go to high-grade copper, and then we'll look at the dollar and the currencies. The silver contract has made a peak D in a left side, right side price time match right there. Look, this is it. I used a different plumb line. I used a little doji candle of the 19th of December, and it hasn't broken above the high that I'm looking for, 17.484, and the continuous contract from the 17th of November got really close on Friday, went to 17.45. So this is a big consolidation in silver, but it is a high-level consolidation, making the 200-period moving average, that line at 17.10, a swing line. In other words, there should be a move like a sine wave that goes above it, that comes back down, goes above it, a kind of a trading range just for the very short term. But the weekly chart has started to improve. High-grade copper at this particular point, HG, high-grade copper coming up. High-grade copper having continuing this down move after the very sharp spike. The very sharp spike from the 2.94 area up to the high of 3.32 that was made on the 28th of December. Ever since then, we've had slightly lower lows and lower highs as a big high-level consolidation has taken place. Today, we touched the weekly charts, 9-period moving average support. Let's see if that's going to hold, and that is a 3.16, I believe it is, 3.188. So that we're watching that very closely. It's down just a fraction right now. Now let's go to the dollar, TXY. Dollar tried to rebound this morning. Now this is going to be very interesting. For those of you who know my work, the technique that I call the left side, the arch formation, the lowercase h, if the price closes below the left side low of importance, in this case 91.01, the low that was made on the 8th, the week of the 8th of September, and on Friday it closed at 91.01. Friday it closed at 90.93. It closed below that. Today it's gone below that. My rule of thumb is you have maybe 2, maximum of 3 bars in which to close back above that left side low. And if it does that, then it could bounce at least to a moving average or a peak above it, and that would take it to 92.23. Going to be watching it real closely this week because the 200-period moving average in the monthly is at 89.65. This has been horrendous action, but the EUR-USD, that is the euro-dollar currency pair, went to a leg F. It's consolidating. It went in the cup formation. It closed decisively above the left side high. This is really a breakout. I'm calling this a leg B in the weekly chart of the euro-dollar currency pair. We'll be right back. Basil Chapman, Tiger Technicians out. 175 S&P's up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, and this is Tiger Technicians Hour. So this is what we want to look at. The euro making a high-level consolidation. Within the context of the euro-dollar making its high-level consolidation, if you look at the USD JPY, which is the yen, this is the dollar-yen combination, that's trying, like the dollar, it's trying to lift off from the bottom. So this is going to be a very important phase. Why? Because the euro seems to have broken out in the weekly chart, and it's very strong and holding very well. The yen has broken down on a very short-term basis. The weekly chart is still actually quite good. So I'm just for the moment going to go back. Keep your eye on the middle chart. That's the weekly. Keep your eye on this. Look here, DXY. Here comes the dollar. Dollar completely broke down. So this dollar has to have a spectacular move to get back into the 92s to really change the trend. I'm not sure you can do that right now, but this is early because the stochastic in the weekly chart is flat at the very bottom at 10%. And the MACD really hasn't failed. It's crossed negative, but it's not as if it's continuing having been negative all the way from October, where the stochastic turned down. So this is actually showing a little bit of internal strength. So we'll give you the parameters. Let's just do it again. Dollar, if it breaks down and goes under 90, that's just a real problem. If the USD JPY, that is the yen, manages from 110.79 up 27 cents, is able to get above 111.88 in this week, that'll be a very big positive. And if the euro, EUR, USD, the euro-dollar currency pair, I'm not sure it's going to do that, closes under the high of the week of the 8th of September, the high of 1.20921, then what we're looking at is that maybe that's a failure pattern, and we're going to be looking at the dollar strength holding. I just don't see how it's going to happen right now, but you never can tell. Let's go to crude oil. Crude oil has been a stellar performer. It's turning around today. It made a peak on Friday at 64.89. Wait, that's the 15th. That's yesterday. Last night it made a high of 64.89. Today's high is 64.89. So in other words, it continued from the night into today's action with a parallel high. So if the crude oil does not close above 64.89 tomorrow, instead has a lower high bar, then you've made a peak E, and you can start to see a consolidation. So this is why it's a very interesting a moment that we're looking at. If you go through, when over the weekend, I don't know how many charts I looked at. I just spent a lot of time, sent out a lot of charts to my subscribers because we have 8 positions. I usually don't. 8 to 9 positions is about the maximum. When I start to get more than that, we're in for some kind of a pullback, that's for sure. But in the meantime, back at the ranch, 7 of those 8 are up really nicely. Some are up really nicely. One is an insurance policy we bought on Friday, and that's down a little bit, actually not down anywhere as much as I thought it would be, and so far it's still our insurance. So this is, I mean, for instance, if you look at the steels, SLX, this is the steel ETF. Look at this. It goes to, I don't know if that's an alternate count, I'm just calling it for now a G in the daily, but it's had a spectacular move. And look at the weekly. The weekly has gone from round about the 42, 44 consolidation area to 50.48. I mean, we have a steel stock. We had a couple. One we've got left, of which we've taken some profits and still have a core position, and that's gone from the 81s to the 91s. These are big moves. General Motors. I just went to the auto show on Thursday. I was asked why did I discuss that in detail on Friday. Well, one of the reasons is I've been going for every year for, I don't know how many, 30 more years. And I go there to assess the state of the economy on a very visceral level. And I'm looking at this and I'm saying what the stock market is portending is that people's expectations are that they don't want anything ordinary anymore. There was nothing ordinary at the show. Anything ordinary, automobiles there started from about 22,000, and you can just add accoutrements, but the quality and the safety is just incomparable to anything that you had, say, 10 years ago, or even 5 years ago. And as for the base levels are like actually some of the luxury vehicles used to be 10 years ago. So there's a tremendous difference, and people's expectations are much higher. That's really what I was looking at. So now let's do a couple of things. So General Motors spikes today. It's up 94 cents at 45.01. We do have position from the 34s, and now here it is at 45. But the left side high of 46.76 that was made back in October, what was it, the week of 27th of October, at 46.76, we've made a cup formation, attempting in the Chapman wave inside wedge target line right there to pierce the resistance and try to get to the 46.76 level. I'm not sure it's going to do that now. If it does, that's really good. But my main thing here is that I think there's a high-level consolidation at worst, making the 40 level really good support, at least going in for the next 2 weeks or so. And I'd love to see it break above 47. That would be very good action. The infrastructure, we're looking at all sorts of things in the different infrastructure stocks. We have a couple of infrastructure stocks. If you want to look at the GDX, someone asked me about the gold. Yeah, gold is acting very nicely. This has been a tremendous move. It has seen this kind of action before, not as big. The move that was back in the summer in July, going from the 21 area to the 25, that was a bigger point move. This is a single leg up so far as well. It's gone about 2/3 of the way. It's gone from the 21.27 level to 24.07 where it is right now. Went a little higher, 24.23. So it's acting quite nicely. The weekly chart is in a W formation. The monthly chart has got an arch that has been stopped from going down further. So it's in a sideways consolidation. Yep, this is good. But what really is the issue, and this is what I spoke a little bit about to subscribers over the weekend, is that the commodities are coming alive, and that I haven't looked at bonds. We're going to go right there in a moment. But if you look at the commodities, if the commodities really start to pick up steam all round, and if, perchance, crude oil goes into the 65s or higher, you're looking at something that the Fed's going to turn around and say, whoa, that was quick. That was really quick, especially if yields. You see, the TLT is at 124.66, up 14 cents. Now, do I have time to do that now? I think maybe I'll have to wait. But what I'll do when I get back from the break, we're going to look at all those different yields, the 30-year TYX, the 10-year TNX, and the 5-year FVX. And you're going to see something that so far is not an aberration, but there's a chance that if the 5-year, the FVX, spikes higher, it's going to create some kind of a distortion that we haven't seen in quite a long time. So with that said, I want you to just show you that TLT is right in the middle of a trading range. That's Lehman 20-year fund. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 142. S&P's only up 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So we're looking at the white lines right here represent the 30-year TYX T-bond yield. The brown is the T-note TNX yield, and the 5-year, the FVX, is right here, the cyan color. And you can see a couple of things going on. First of all, you see the squash that's occurring there. See how close they're getting on together? That's very unusual, much closer than any other time before. The other is that the 5-year is only, a weekly chart is only in a leg C. It should go to a D. It usually does go to a D. That means higher yields are going to come in the 5-year. The leg D that we're looking at in the weekly chart, well, that says that it is not quite up to the level that it was at, the high that was made back in December of 2016 at 26.21. It's trading right now at 25.61. So it's got, 50 cents or something to go, 60 cents. And the 30-year is just kind of stuck in this range. So this is part of what we're looking at in terms of the yield, in terms of the flattening of the yield curve, etc. So, with that said, this is very interesting. Look, the wood iShares Global Timber and Forestry ETF did make a new high this week. It's now pulling back a little bit. It's up 20 cents at 74.54. This is leg G-SASI. Very strong move using this red line. See, now we're going, actually, I've been wanting to do this all the time. This is now at about, the angle we're looking at is around about 40%, 42%. Here. For the HGX, the Philadelphia Housing Index, is actually much more. It's almost 50%. Let me just check that out. I would say it's at about this one over here. Yep, nearly 50%. So this is going to be very interesting because the angle of ascent is climbing. So let me just get out of this, and I want to do some other things. So the 5 and the 10 minute E-minis gave really good signals. This was a peak E at 10 o'clock at the high of 28.08.50, and that was a peak D. In the 10-minute chart, we pulled back very sharply. Look how important the 200-period exponential moving average is. Even in the 10-minute chart, look, it broke below it. It hasn't been there since, I think, back on the 10th of December. It took off from that level. So this is very important. We're going under it for the first time. We'll see if we're starting to see a little crack in the upside momentum. We'll know that by not today or tomorrow, probably by Thursday or Friday. Now let's get back to what we want to look at here. Within the context, so this is how did I get out of that? I just took out the wrong chart. So let me get out of this here. Close this. Close workspace. Yes to all. Save it. Come back again, and we're going to go to most recent chart. That'll be white time frame, 3 time frames. There we go. So I wanted to show you a couple of things. I was asked a couple of questions. I'll try to get to them right now. Let's go there first. In the den, the question was, would I look at, Goro, G-O-R-O. Do you know that I've never seen that before? Go, G-O-R-O. So here it comes. Black background is changing. Within 2 seconds, it should come up. And 1, 2, maybe 3, or maybe 4. All right, coming up. Gee, it is taking a long time, isn't it? We've got. That's unusual. Oh, there we go. Okay, so G-O-R-O. G-O-R-O is in fact Gold Resources Corporation. Oh, Gold Resources Corporation. I don't think I've ever seen that before. So this is daily A, B, C, D. Very sharp D. So what's the question? The question is, what's a good entry point? A, B, C, D, E. Weekly chart, E. Monthly chart. Okay. It's trading at $4.88, up 22 cents. If you want the best risk reward, I'd be looking at it below 460, probably closer to 450. That's what I'd be looking at. But if you want, you could have 2 positions. One says you like it very much and you want to be in right now. If you want to be in right now, you really have to make a much smaller position. This is like a tiptoe position, 488. I would prefer to get it at or just below the high that was made in the 26th, where it was at $4.60, 26th of December. So here's my recommendation. You can nibble now, but the real entry price is below 460. That's the way I'm looking at it right now. If you miss it, that's the reason why I say you could just tiptoe in. But I believe if you miss it, you'll still get a chance at some point to buy it under 460. 460 is the price that I'm looking at. If you want the best risk reward, I think that's your question. GILD is the next question. Gill, that is Gilead. Whoa, nice move up. Leg C in the daily. Leg, that's really, all right. So you have to be a little careful. Gilead Sciences has gone in the last year and a half from the 120s down to the 63 level, 63.88 level. Now it's trading at 79. Nice rebound. But I'm going to say that if you're looking longer term, and I think it really is trying to put some kind of a base in, would I buy it now? The MACD is good, stochastic. Yeah, this is the way I would look at it. It's trading at 79.73. This inverted, this candle that we're looking at with a very long wick of 81.59 high, trading right now towards the lower end. I'm going to say to you, you could start a little position at 79.72. The area that I probably say is the best risk reward is between 78.35 and 77.50. That's where I would start a position. I still wouldn't get a very big position. I'd only call it a starter position. I would much prefer to add on strength in Guild. So let's go to Paul in, Paul, is that Henderson somewhere? Hi, Paul.
Good day to you, sir. How are you doing, Basil?
I'm well. Where are you calling from?
From Henderson, Nevada.
Ah, it's Nevada. Okay, I thought Henderson. Okay, very nice. And you'd like to look at?
I would like to look at Bitcoin on the daily chart.
GBTC, okay. You're looking at Bitcoin itself or the fund?
Bitcoin itself, the actual underlying.
Okay. I'm going to not be the one to do that because I keep meaning to get the most up-to-date. I have, in fact, right here. I'm going to get it in 1 second. Get bookmarks. Let me see. This is it. Here it is. So now, what price do you have it trading at this very moment? 11.
I'm looking at the. I have two charts up. One is on GDAX, and that is 11,694. The other one is on the Gemini exchange, which I can get on my TC2000, and that is at 11,531. So they're really close.
So I've got 11,394, and I might be wrong because I've seen others being shown on TFNN, and usually I'm within 10 minutes or so of the actual price. So I'm going to say this is the pattern that I've been looking at, and I've discussed this for a little while. In fact, I've discussed...
You're on crypto. I see you on CryptoWatch.com, so you have the right. That's right.
Okay, very good. So, yeah. As I said, I don't trade this. Later on, maybe in the year, I'm going to get into some of the other things that I have to do.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back, and this is a very interesting chart we're looking at. Back with Henderson, Nevada, and we're looking at cryptocurrencies, and this is trading right now with a low of 10,891, and it's making the pattern that I like. How can I get that to move? There you go. Okay. And what we're looking at is a pattern that I've spoken about with these cryptocurrencies that I've seen so often. Ever since we made the high, that was really important. I had that peak F. It was in the GBTC, the fund. This has been pulling back quite sharply. And what I'm really looking at is the pattern that I call the lowercase h, the dreaded H. In other words, if the move that comes down, if it retests the left side low, breaks under it, and closes under it, it means you've limited the upside unless you get a completely new buy signal because the technicals are really strong. But if the technicals are weak, it's going to go even lower, which is what this has done. So I'm going to, do you have any position now?
No, I was looking at it on the daily chart and listening to some of the other wonderful hosts. We're looking at possibly the lightning bolt pattern, I know you like to call it, or the ABC down.
Right.
To complete around 8,400 possibly.
Okay, so
I just wanted to see what your analysis was.
Okay, let me just speak to those particular issues. When we're looking at the lowercase h, you can see if you look close enough, there's almost like a lowercase h that has gone to a lowercase m. That is saying that there's a really good chance that if there's a break under 10,891 that holds below there for 2 of these bars, and I believe I'm looking at a 15-minute chart right now. Yep, the 15-minute chart. That's going to suggest that there's going to be lower prices to come and that any rally should fail unless the technicals, and they don't look like they're going to do that right now, give a really strong buy signal, because if that buy signal kicks in, normally it will kick in beforehand, before the test. It'll kick in either now or a little bit later without going down very much more, and that would take it above. And now if it goes above 12,212 anytime today, there's a good chance it's going to try to even test the this moving average, the blue line of 12,292. My thinking right now is that the pattern that I've been looking at for so long is getting real close to some kind of a culmination on the downside, at least for a pretty decent bounce. We're not there yet. I don't think we're there quite yet. And that tells me that the pattern you've got to keep looking at is the arch formation that breaks the left side low and closes below it and then keeps going lower. That would say, lower prices to come. The only time that is going to change is that if there's a really powerful move and you see, I wish I could tell you right now, I don't have that information on what the number is and what this particular moving average, I've got a feeling it's the It's a 20-period moving average. I wonder if I can look at it a little closer. It's just not written in there. Usually these would be highlighted. I can't tell, but it needs to close above this blue line, and I gave that blue line. That's in the 12,370 area. So here, this is what I'm saying to you.
Okay.
I believe we're going down. At some point, there's going to be a really strong bounce. That bounce has to hold above any of these arches that are made, because the pattern that you're looking at is constantly the arch formation, and then it breaks the left side low. When that changes, all of a sudden you're going to get a pretty decent bounce in the in the cryptocurrencies, and they kind of are moving it together. But holding off is not a bad idea. The only thing I would say is if on an intraday basis, if it retests 10,891, doesn't close below there, but instead has a nice bounce to about 10,920, be ready to see it go even maybe 40 or 50 points higher.
Okay.
So that's the only way I can look at it. But to tell you the truth, my analysis based, and if you don't mind, I'm just going to go to the GBTC, which is this is the over-the-counter GBTC. It's called the Bitcoin Investment Trust. That has got a peak to it in the daily, a peak effort, 35.23 round number high on the 19th of December. It's got the arch formation, and it's really getting close to key support. If it takes out 1648, and it's right now at 1770. So if it goes down about another 22 points, I would not be surprised if it's going to test the low that was made back on the 22nd of December at 1.155. 1,155. So I'm using that as a benchmark. I think on a daily basis, I wouldn't be surprised if we're in about within 3 to 4 days of a sudden, really sharp bounce. But I would still say that it's only a bounce at this point. I wouldn't be surprised if the whole Bitcoin area needs just at least another week or two to consolidate these huge gains and then get everybody out, everybody nervous, and then restart. So that's really what I'm looking at if you want to get a bigger picture.
Yeah, no, I agree, because even just last year, the first time that I bought Ethereum, this was towards the middle of last year, it was only $70. And now we have it above, I'm not sure what the exact price is, but I know it went above $1,200 just recently. It seems extremely extended. We'll see how it all shakes out.
Yeah, and not only that, I don't think you need to be in a rush, because I personally am also looking for the next, what I would think is the next very big move, but I think we've got a little bit of conflagration going on in this whole area. It just needs time. Maybe it doesn't need all that much more price. Maybe in the GBTC, it's going to be the 1,500 to the 1,200 area that holds. I'm just going to let it play out, because I think, as you said, very overboard.
Yes, sir. Well, thank you so much for your time, Basil. I appreciate it. Great show. Have a good day.
Thank you very much for listening. I appreciate that. And good luck.
Thank you so much. Bye-bye.
Pleasure. So, folks, we're looking at the Dow up 134. If I can just take a moment, I want to show you something that I consider to be part of the vernacular, part of what we're looking at, and that is, if you're looking at the Dow, going backwards, if you're looking at the monthly candle, this huge candle, this is one of the biggest candles, this is the biggest candle we've ever seen in the Dow. Let me just, I want to see if no, it isn't. Well, certainly this is one of the biggest candles we've seen since October of 2015, biggest green candle. What I'm really looking at is that the MACD is still rallying. The stochastic on a time basis is starting to get into an area that says it's extended in time, but at 98.49, the stochastic is it's $1.50 away from 100%, and the stochastic never goes to 100%. So this is right bumping, but it's done that for over a year. It's been at this very high level. And that says to me that I don't want to get in the way of the monthly. The monthly is going to tell me, because the weekly is breaking down. The weekly can only break down if the daily, and none of them have so far broken down. But I am looking at a market emotionally as I read it. If I step back and I listen to what the reports, and if I listen to, say, CNBC a little bit, or even Bloomberg News, I'm just starting to get a sense that there are people now just throwing up their hands and saying, okay, this is never going down. This is a market that I'm not getting in the way. I'm not shorting. I'm just either stepping aside, or I'm actually going to add to the positions, my long positions. I'm looking at this and saying, markets don't go up forever. They do consolidate. And I would not be surprised if we get real consolidation.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. We're back. I've got a question about RF, which is Enter Plus call trading at 11.13. I'm 35. Good entry point. A, B, C, D. For the person that asked, I would say, in your case, I would actually start a little position here at 11.14, because looking out, I think it's going to go to the 12.30s. But on a shorter-term basis, I would prefer to see the 9-period moving at 10.46, somewhere there. Just risk-reward. I know it's only 45 cents if you think it's going to go up $1. But that's just the way I'm looking at it. So, yeah, in your case, I say you could start a little position here. In my case, I would say I'd wait for the 10.46 level. So 10.50, 10.46. Okay, so now I want to do a couple of things. You see the VIX index right now, VIX.X. It's up huge. It's up $1.33 at 11.49. And the market's at all-time highs. So either someone's buying insurance and saying, you know what, I'm prepared to pay up for the insurance, And we have seen occasions where the VIX index has risen and has actually been a precursor of a move to the upside in the VIX as the market has pulled back. Occasionally, we've also seen it wrong. But as an initiation move, I think going from the close of 1018-ish on Friday to a move today, 1146 over, 12.8% higher, I'm just looking at this and saying, it's funny because I said to subscribers, I think we're getting really close to a move in the VIX index. We don't have a position in it because I didn't expect that the market would be up this sharply, and yet the VIX index will be moving. But if you actually look at the S&P, it's only up 3.45. The Dow's pulled back 100 points from its high. It's up 122. So I think the market's just right now becoming emotionally and physically overbought. I'm not sure it's there yet. We might have to have one or two little flurries to the upside. But I'm looking at certain positions, for instance, XLF. XLF is trading as the financial trading up 0.06 in leg D. I just think the market's getting a little bit tired here. So I'll be back later on, 4 o'clock, to do the Tom O'Brien Show. And thanks for being here. I appreciate it. Stay tuned to Steve Rhodes and Dave White and all the other guests. I'll be back later. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.